Welcome to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. In a significant development for Sri Lanka's economic recovery, the government has officially concluded its bilateral debt restructuring process with France. According to the Ministry of Finance, the final set of implementation letters between two governments was signed on the 16th of July, marking the formal end of the restructuring phase. As a result, Sri Lanka will now be able to temporarily resume previously suspended loan financing from France. It also opens doors to secure new funding for development projects from all French government lending institutions. This bilateral agreement follows the Memorandum of Understanding signed with the Official Creditor Committee on the 26th of June 2024. Following that, similar implementation letters were also signed with BPI France Assurance Export and the Banque de France. This marks a key milestone in Sri Lanka's broader efforts to regain international financial credibility and secure essential development financing. Sri Lanka is set to introduce a transparent and structured tax regime for investors, with incentives tailored to the size and sector of the investment. According to the Industries and Entrepreneurship Development Deputy Minister, the government aims to provide clear tax guidelines that will attract both foreign and local investments. He stated that the recent tax holidays granted to 4 major projects within the port city are expected to set a precedent for similar future incentives. These 4 companies, Ceylon Real Estate Holdings, Clothespin Management and Development, IFC Colombo and ICC Port City will enjoy full exemptions from income tax, dividend tax and capital gain tax for 25 years. In addition, they won't be subjected to withholding taxes during this period. Following that, each of these firms will receive a 50% reduction in corporate tax for another 10 years. Deputy Minister emphasized that these incentives were secured after demonstrating to the International Monetary Fund the need to boost investment-driven growth. He also noted that a comprehensive tax structure will soon be introduced, offering sector and value-based incentives, particularly for foreign direct investments. Meanwhile, the Ministry of Industries is also exploring tax concessions for domestic industries with a focus on balancing government revenue with the broader economic benefits of job creation and industrial growth. Looking ahead, the government plans to introduce a long-term legal framework to guide investment promotion within the year. Sri Lanka has achieved a record-breaking $8.3 billion in export earnings during the first 6 months of 2025. According to the Export Development Board, this surge is largely due to strategic efforts to diversify both export products and global markets. EDB chairperson noted that exporters have navigated global challenges effectively by expanding into new markets and offering a broader range of products. The country now aims to reach a full-year export target of $18 billion. Monthly data from the EDB shows that in June alone, export earnings rose by 8.73% year-on-year, totaling $1.46 billion. Among the standout performers, tea export rose by 11% in volume compared to June 2024. Strong demand came from Iraq and Libya, with increases of 83% and 172% respectively. However, tea exports to Iran dropped by over 55%, likely due to fluctuations in the ongoing tea for oil agreement. Meanwhile, the apparel sector also showed growth. Total apparel exports rose by 5.2% in June year-on-year. Notably, exports to the EU and UK surged by 23.1% and 20.4% respectively. However, shipments to the United States, Sri Lanka's largest apparel market, declined by 5.7%, with a further 9.3% drop seen in other global markets. The EDB noted that this performance reflects the long-term goals outlined in the 2018 National Export Strategy, which prioritized diversification as a path to growth. Looking ahead, the board is preparing a new 4-year National Export Development Plan to sustain and accelerate export performance. Colombo Port has shown signs of a turnaround, recording its first year-to-date growth in 2025 thanks to a notable surge in transshipment volumes in May. The port handled 573,366 20-foot equivalent units or TEUs during the month, marking a 12% increase compared to May last year. This is also the highest monthly figure recorded so far this year. Despite lingering effects of congestion and operational delays, the sharp rise in May helped ease the overall year-to-date decline in transshipments. Compared to a 6.2% year-to-date drop by April, the gap has now narrowed to just 2.7%. In total, the port's throughput reached 3.26 million TEUs by the end of May, nudging the year-to-date growth to a marginal but positive 0.2%. Industry analysts welcome the rebound but continue to raise concerns over overall efficiency and capacity at Colombo Port. In comparison, May 2024 has seen a dip of 4% in transshipment volumes. However, that year ended strong with a 13% growth in transshipments during the first 5 months. Meanwhile, domestic container handling also gained momentum. Domestic volumes grew by 8.8% in May to reach 91,648 TEUs, pushing the year-to-date total to over 517,000 TEUs, a significant 16.4% increase from the same period last year. The number of vessels calling at Colombo Port also saw an uptick, rising by 6.7% in May and 5.7% for the first 5 months of the year, totaling 2,005 ship arrivals. In 2024, Colombo Port handled 6.3 million transshipment TEUs, up 9.7% from 2023. Its overall throughput reached 7.79 million TEUs, growing by 12% year-on-year. In a move expected to ease trade flows, the United States has announced a reduction in reciprocal tariffs on Sri Lankan imports from 30% down to 20%. Sri Lanka's Treasury Secretary, Dr. Harshana Surya Perumal, has welcomed the decision, calling it a timely step as the country seeks to enhance market access and lower trade costs. He explained that Sri Lanka remains a net importer, especially in critical sectors like energy, raw materials and advanced machinery, key inputs for local industry and consumer needs. The government, he said, is now actively working to reduce restrictive tariffs and para-tariffs. In parallel, Sri Lanka is pursuing better pricing options, particularly in the energy sector, as global trade volumes rise on the back of ongoing negotiations. Dr. Surya Perumal also noted a strategic shift from government-to-government dealings to private sector-driven trade, particularly with American suppliers. This approach, he added, will foster greater competition and transparency. Beyond tariff reform, the Treasury is prioritizing trade facilitation measures. A major initiative in this space is the National Single Window System, aimed at streamlining import and export procedures. He also emphasized Sri Lanka's zero-tolerance policy on corruption, stating that improved governance is essential for cutting business costs and boosting institutional performance. According to Dr. Surya Perumal, Sri Lanka's trade reform strategy goes beyond commodities. It includes structural improvements designed to position the country as a more attractive and efficient hub for global trade and investment. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.62%. The 182-day T-bill rate stands at 7.91% and the 1-year T-bill rate stands at 8.04% with no changes compared to the previous week. Thank you for watching. We'll be back next week.